we've reached the end of the line for season 1 of ETF Battles, and man, what a year it's been. After today's face-off, there will be one final episode of the year. So tell us what you've enjoyed most about ETF Battles in 2020. Hit us up in the comment section below, or you can find us on Twitter at ETFguide. After today's battle, each of our judges will take their turn at telling us what they've enjoyed most about ETF Battles and share any other thoughts that they may have about the show, or perhaps a vintage moment from season 1 that they remember. And if you're new to the show, I'd like to welcome you to the program. It's great to have you with us. Be sure to subscribe to ETF Guide TV, where you get carefully crafted content like ETF Battles and other programming that you will not get anywhere else. Now, before I go any further, I want to give a huge kudos to Todd Rosenbluth, one of our illustrious judges, for his recent appearance in the Wall Street Journal. That was the December 7th edition. If you missed it, look it up. So nice job, Todd. It's great to see that ETF Battles is not the only place that's been benefiting from your wonderful insights. So today's clash is between two real estate focused funds. You know them. These are the big ones, the iShares Global REIT ETF, ticker symbol REET. And if you don't know that one, well, then you'll know this next one, which is the Vanguard Real Estate Index Fund. That's ticker symbol VNQ. You know, Donald Bren and Sam Zell shouldn't be the only ones that get to own all the real estate. Okay, just FYI. And so these two ETFs give you an opportunity to participate. And so we're going to compare these two funds against each other. Real estate, as many of you know, is a major asset class that goes right alongside the stocks and the bonds in your portfolio. Real estate has not performed well recently. Nevertheless, people like it because it's tangible, it throws off income, and it can be leveraged. So let's welcome our judges, John Davi with Astoria Portfolio Advisors and Todd Rosenbluth with CFRA Research. Gents, welcome back to ETF Battles. It's great to see you.
Thanks, Ron. Good to be with you.
Good to be with you guys again.
So we've got our 4 battle categories. And as you can see, my battle scorecard is blank, which means it's ready. I'm going to fill it out. We're going to go through each one of these categories one at a time, beginning with cost, exposure strategy. We've got yield and performance together. And then we've got our mystery battle category, where each of our judges can pick that one factor or multiple factors that they feel are key to today's showdown. So each of you have got 30 seconds to go through each of these categories. You can also opt for a split decision if you feel that neither fund has an advantage over the other. We're going to begin first with Todd, and the first category is cost. You got 30 seconds, go.
Yeah, these two ETFs cost about the same. It's 12 basis points for VNQ. It's 14 for the REIT ETF, REET. But why we think VNQ gets the edge is there's just higher trading volume. It typically trades with a tighter spread. And so that cost is also important. And so VNQ gets a slight edge, but I guess still an edge over REIT in our opinion.
Right. Thank you very much. That's a good start. And how about you, John? How do you see it in terms of cost?
I don't have any disagreements with Todd. I mean, it's cheaper by a couple basis points, but we look beyond management fees at Astoria Portfolio Advisors. You know, trade in, bid offer, liquidity. It all bodes better for VNQ. But it is very different. You know, we'll talk about exposures in a second. You know, one's pure U.S. large cap. The other is global plus U.S. So VNQ wins, by a significant amount when you incorporate its total cost of ownership, including trade and bid offer liquidity.
Excellent. The next category is exposure strategy. So how do you see it, John, in terms of these two ETFs against each other?
So I like REIT because it's global. It's got U.S. plus international, and it has an allocation towards mid and small cap stocks. So for us as Astoria Portfolio Advisors, we like to tilt the portfolio away from the standard benchmark and indices. So having an international allocation for us makes sense, given that there's a cyclical upswing to the U.S. economy and global economy for that matter. The U.S. has outperformed quite significantly compared to the international markets the last, 5-10 years. And then small and mid-cap stocks, I think, are more attractive on a relative basis because they have more operating leverage to the economy. So in my eyes, REIT beats VNQ on exposure.
All right. Thank you very much. And what about you, Todd? Do you agree with John's assessment?
Yeah, again, global nature. So you get United Kingdom, you get Australia, you get Japan, developed markets. In addition to U.S., it's about 2/3 REIT that we're talking about is towards the U.S. So if you're building a global portfolio, you likely are not going to have an international slice of real estate and a U.S. slice of real estate. So I think REIT is the winner in terms of exposure for the reasons that John touched on.
Excellent. Next up is the yield and performance. So we've got these two together. And Todd, you're still up. How do you see it in terms of these two ETFs in this category?
So the yield is higher for REIT, again, for the risk that you're taking on and the global nature relative to VNQ. But VNQ has just significantly outperformed. The U.S. market has done better, depending upon when we watch this, but it's about a 300 basis points of outperformance for VNQ on a 3-year basis. It's outperformed on a 1-year. It's outperformed year to date. It's actually outperformed, I think, in 4 of the last 6 calendar years, if you want to slice it based on that measure. So VNQ is the outperformer, and we think for good reason. So we give the nod to VNQ.
Excellent. What about you, John? Do you see, or do you agree with Todd's assessment on yield and performance?
I agree. But, I think on a forward-looking basis, international markets are a little bit more attractive. They've got better fundamentals, better valuations, a little bit more of a margin of safety. So I give, on a forward-looking basis, the edge to REIT. But yes, backwards looking, I would say VNQ beats on performance and yield.
Okay. So your pick then is VNQ, or would you go for a split decision?
I'll go for a split.
All right. And I hope I didn't lean you towards a split decision. Look at Todd shaking his head. All right. So that takes us to the mystery battle category. And this is where the judges can pick whatever factor or multiple factors that they feel are crucial to this battle. So John, you're still up. What is your mystery battle category and who wins it?
So I'm going to give the mystery category to valuations, and I'll give the edge to REIT. I think, one of the issues I think with the show is that we've got to spend more time discussing why you're putting something in the portfolio, what's the macro rationale. I want to start talking more about fundamentals on the show. I think cost, liquidity, performance, yield, they're very backwards looking indicators. I think the minute you open up a portfolio and you decide what to put in it, you are making an active decision. So if you're going to make an active decision, you might as well go the full spectrum and look at, earnings, valuations, P multiples, ROE, ROA. So when I look at, the two ETFs, I do see that REIT has better margins, better ROE, lower PE, higher earnings growth. I think fundamentally it's more attractive. And then when I look at the macro landscape, what's going on overseas, the U.S. has outperformed the last 10 years compared to international markets. And I think, on a forward-looking basis, especially now that we've got this cyclical upswing in the economy, you have more operating leverage when you buy international stocks. So on a forward-looking basis, I'd give REIT an edge on this mystery category of valuations, which I think should be more of an important consideration when you do the show. And this should be a permanent category that we look at.
All right. Well, thank you for weighing in on that. And we got you down for valuations as your mystery category. What about you, Todd? What is your mystery battle category and who wins it?
So I bring the same mystery category, I think, time after again. We at CFRA are an independent rater of 1,800 different ETFs. We rate both of these ETFs based on cost, which we touched on, reward and risk metrics. VNQ gets a 5-star rating to us, whereas REIT gets a lower rating to us. And so VNQ is the stronger performer. We think, I agree with John, valuation matters. We think the reward potential in the current environment is stronger for VNQ. So I agree with this category, but I disagree with the winner. We think VNQ is the winner.
Okay. And that, so Todd, you're still up. So give us a recap, your overall winner between REET and VNQ.
So keeping it short and simple, VNQ is our winner. It's cheaper. It has performed better in the past, and that past has some value. And we think that going forward from a reward potential, it's stronger. So we would put VNQ over REIT.
All right. Very good. And what about you, John? Recap for us who your overall winner is between these two ETFs.
If I'm going to put REITs in our portfolio, I would put international REITs. I would put the REET. We don't currently have it in our portfolio, but as I talked about, before, I think that it's got more operating leverage, more better fundamentals, cheaper valuations. I like international markets. You get that allocation, the 25% split that Todd mentioned. So I'd give a little bit of an edge to REIT if I were going to include it in the portfolio.
All right. Well, you guys have spoken, and according to my battle scorecard, this is a split decision between Global REIT and U.S. real estate. And you guys agreed on cost. You also agreed on exposure strategy, but your other areas like yield and performance, as well as your mystery battle category and overall battle winner, were split decisions. So I think each of you made some great points. Of course, real estate ETFs have a lot of advantages over physical real estate. You get that daily liquidity as well as some financial flexibility because you can buy and sell real estate ETFs when the stock market's open. Also, real estate obviously is a tangible asset that offers excellent diversification that plays a complementary role to the stocks and the bonds and the cash inside your portfolio. So it does have a place. And again, this is a core asset class that all investment portfolios should have at least some exposure to. So judges, great job. I want to ask you before you take off, and we'll start with Todd. Season one is over, and I want to ask you what particular vintage moments you've enjoyed, any thoughts, any particular battles that jump out at you, or other observations about ETF battles. Take it away, Todd.
So I have to admit, I don't recall which episode that John and I were together where Mr. Met appeared during the segment, which was pretty cool. John and I are both New Yorkers. We're both Met fans. There's not a lot of us in New York. And so, kindred spirits. I think we also have a similar approach that past performance is not indicative of future results, and you got to go under the hood with ETFs. And I think this show does a good job of going deeper. People focus on usually one metric, either cost or performance. I think we're covering more of this, and there's a lot more we can continue to do. But I've enjoyed being a part of this with you, Ron, and regularly with John.
Yeah, very good. Well, we have too. What about you, John? Weigh in. What takes do you have about season one?
So the Mr. Met was definitely really cool. As a diehard Mets fan, growing up in Queens, I still live in Queens. Very excited for the new ownership. I think this show is helpful. I think we should continue to do more of these, and then I think we should add other categories. So the difference between what Todd does, independent research, versus us, like practitioner, where we actually put money to work. I think it blends together nicely, and we've got two different vantage points. Independent and practitioner. So that's pretty helpful and useful. I like to add more categories. I think the earnings, the valuations, the fundamentals is really, really important. And that's something that should be, second, third generation that people use, when they're building portfolios.
Yeah, those are some solid takes, and we'll have to see about possibly adding those ideas for season two. We'll have to see also what the viewers think, because we'd like them obviously to weigh in. And I just a huge thanks to both of you for lending us your insights to the show. It's been an absolute blast, and we'll see you on the other side of 2020. Be safe, be healthy, and stay liquid. Well, that does it for this round of ETF battles. Tell us what you've enjoyed about season one and which ETF battles you'd like to see in our next episodes. Post your thoughts below in our YouTube comment section. You can also find us on Twitter at ETFguide. I'm Ron DeLegge. Thanks for watching. And until next time, watch the battle before you invest.